Let's focus on the booming market for exchange-traded funds. We are joined by Valerie Grimba, Director of Global ETF Strategy at RBC Capital Markets. Valerie, great to see you as ever. Thanks for joining us.
Thanks, Andy, for having me.
Just remind us, how big a year has this been for inflows into ETFs in the U.S. and Canada?
Yes, the records kind of keep coming. We saw a very big milestone in both Canada and the U.S. in October. We saw U.S. ETF fund flows cross through the $1 trillion mark in the start of October. And here in Canada, we also crossed the $100 billion mark in ETF fund flows. So it's been nothing shy of a banner year, and we still have 2 months left to go.
And you're seeing one interesting factor here. XIU was, I think, the world's first ETF years ago. It offered index exposure to the blue chip stocks in the 60 index. But you're seeing growing interest in broader ETFs such as XIC, indicating investors want to have more stocks or exposure to more stocks?
Correct. Yes, you're right. The TSX 60 in XIU was the world's first ETF about 35 years ago. But we have seen a rotation out of XIU and into XIC and other Canadian broad market ETFs. So the 60 XIU just holds Canada's 60 largest stocks. But actually, the kind of smaller cap stocks have been performing better in the last quarter, even in the last month. And we've seen fund flows very much rotate out of Canadian large cap and into Canadian broad market indices.
That's interesting. I'm just looking over the past 5 years, not a big difference in performance between XIU and XIC, but that's interesting that you are seeing more interest in a broader
yes.
panoply.
It's been a bit, sorry, Andy, just to interrupt, it's been a bit driven by the material sector outperformance, and by adding that kind of tail of smaller companies, it really overweights the material sector, and so that's been a big driver of the recent outperformance.
And you like to call these Pac-Man ETFs. These are ETFs that offer real one-stop shopping. It's a bunch of ETFs combined into just one package?
Yeah, correct. I've been calling it the Pac-Man because it's kind of been having more flows. Every day it comes in and these ETFs just gobble up the flows. And so they're kind of all-in-one solutions. They hold a variety of ETFs. They all sound similar by name, by tickers, very similar. There's VEQT, XEQT, FEQT. But under the hood, actually, all of these ETFs are quite different. So we are always out there recommending investors to do due diligence on what the kind of all-equity ETF portfolio actually holds, because it could realize in very different performance realities.
Yeah, that's interesting. I mean, people, I guess, all human beings, we just want a fire and forget solution. Yes. But you should drill into what these things are actually holding.
Certainly, it's definitely the easy button for investors.
You are seeing the old buy the dip mentality when it comes to ETF investor behavior?
Yes. October was a very fascinating month. You know, all-time highs in a lot of different markets and in different asset classes. But there were a few significant down days within the month of October, and you were talking about it earlier. Valuations are looking a bit punchy, and people are kind of evaluating our valuations where they should be. But when there was a down day in the market, in the equity market, we saw ETF inflows take in more assets. And so to us, this is a very strong muscle memory right now. If it's a down day, investors view this as an opportunity, and they are stepping in right now. So we haven't had, in my mind, a material enough drawdown where we get any kind of skittishness, at least from the retail investor.
That's interesting. I mean, until lately, markets were hitting record highs, so it was justified. That's fascinating. But so that points to, among smaller investors, just confidence in the market.
Yes, correct. And it actually is a continuation of a broader 2025 theme. This is being risk on, and we're seeing that in fund flows into tech and growth and Mag 7 and emerging markets. These are kind of typically more risk on pockets, but we're also seeing investors get a bit of a safety net and a bit of an insurance policy. So we're seeing strong fund flows into ultra short treasuries, really safe paper. Of course, physical gold had a weak month, but inflows were still $7 billion into physical gold ETFs in October. So it's risk on with a safety net, and we're seeing that continuation pan out here in October and into November as well.
And consistent buying in the QQQ, the giant NASDAQ 100 ETF.
Yes, exactly. And I think, there was a few outliers in the earnings season, but broadly speaking, earnings held up, and fund flows kind of jumped back in last week, kind of as they had wrapped up Mag 7 earnings.
Yeah, I mean, that QQQ, that's been around for a few years as well as a play on tech. And I'm just looking here. Actually, I don't even have an asset number for it, but I'm sure it is huge. Yeah, $400 billion in that QQQ. And you're also seeing decent flows into European ETFs.
Yes, it's really been a strong story here in Canada. Developed markets ETFs have seen significant fund flows. They've been leading the way, even kind of month over month, European developed markets. But very recently in the U.S., we've seen U.S. investors kind of dip their toes into this trend. And actually in the past week in the U.S., almost a third of all equity ETF fund flows, a third of all fund flows were into international ETFs. So investors looking outside of the U.S., perhaps, again, they are concerned with valuations as well, or they're looking for a diversifier, and they're moving and looking at buying international securities via an ETF.
And just talk briefly, if you would, Valerie, we've seen the rise of these single stock leveraged ETFs to produce what's billed as a high yield. Are they still popular?
Yeah, again, I think dividend and the concept of adding income is very popular, especially now with rates moving lower. We had both the Fed and Bank of Canada cut rates in October, so investors are looking for other vehicles and other ways to kind of bolster their income in their portfolio. And naturally, these high income producing ETFs that are very much focused on delivering monthly income to ETF investors are seeing fund flows and continued popularity right now.
Valerie, thanks very much indeed.
Thank you.
Valerie Grimba, Director of Global ETF Strategy at RBC Capital Markets.